Jonathan Shijel, fund manager at IIFL Asset Management, joins us right now on the show with his thoughts. Jonathan, good having you. Thanks much for joining in. There is presumably some rethink, or at least some years, which will be lent to the FPI community when it comes to the taxation that came about in the budget. This month of July has seen incessant selling from the FPIs. You would be a good gauge of what's happening in that community with regards to view to India and how you yourself are viewing investments in India right now. What's your sense if that does turn around a bit? Does it turn the sentiment, or the slowing economy is the principal reason and this selling would continue?
Good morning and hi. I think it's a bit of a mixture of everything, really. I think clearly there was expectations for the budget, which, for whatever reason, haven't been met. Then obviously the continual tinkering with taxes and stuff clearly doesn't help from an FPI perspective. But probably most importantly, quite frankly, is India still trades at a decent premium to other emerging markets. I think this growth slowdown is clearly, leaving some questions in some foreign investors' minds about why we should pay such a large premium over other emerging markets, when the economy clearly has been slowing down and earnings, we're still waiting for this long-fabled earnings recovery.
Your clients, Jonathan, talking about, or people that you speak to, are they talking about, you yourself, are you thinking of investing in other Asia-Pacific markets over India currently, considering that India, of course, is no longer at that 19 times valuations, and even though at a premium, but at a slightly lesser premium, maybe 16.5, 17 currently, after the fall that we've seen?
Yeah, I think that's a fair point. The premium certainly has contracted substantially. I think, clearly what's concerning investors, if you look at developed markets versus emerging markets, then the trade story goes on. China had obviously come off. It's settled down a bit at the moment. That's going to impact sentiment massively in the whole EM complex. I don't think, in reality, I think most investors probably, with the continuing outperformance of developed markets, of the US in particular, we've seen little tentacles coming out into emerging markets, but we haven't seen the big movement yet. There was obviously some buying of India a few months back with around that election and just before the election. We've seen a little bit of money coming out, but if you look historically at prior periods of FPIs pulling money out, this isn't a particularly large scale correction that we've seen just yet. So it could go on a little longer unless we either see some sort of improvement in sentiment overall in the emerging markets complex, or we see something that might surprise coming out of India, be it a larger rate cut than expected or something from government.
Jonathan, up until now, we've seen a lot of money being poured into, the high-quality consumer finance businesses. And according to most brokerages, global brokerages now, it looks like that the boom in the consumer finance space in India particularly has started to peak. Is that a view that you share too?
Not really. I think it's very interesting how quickly sentiment changes, and you see all these very negative reports coming out about certain sectors that have been obviously fast growing. Perhaps we're sort of pushing up near the top of the cycle in this area, but I think it's a cycle that can last a lot longer. It has been noteworthy that even some of the quality consumer finance plays. And the guys who are lending in that space as well, the really good quality names have been warning about certain pockets of stress. So I think there is undoubtedly stress, but I'm not quite sure I would sort of concur with the very bearish views that some have out there on the space.
Then that leads me to my next question, which is in conjunction to the previous one, and that's obviously the auto pack. And while we're talking about consumption as a space, this discretionary pocket, which has been bogged down up until now, quarter after quarter, since the last three quarters at least, no signs of recovery, and the government is really not doing much in order to spur immediate demand. You have a good coverage on some of these or bigger auto names. What would you do now?
Well, we've been, I guess, suffering a bit of pain with some of the stocks there. I think value as a style globally hasn't been working for some time. And I guess if you look at the Indian market, value as a style hasn't traditionally worked, but there's certainly some value to be found in these auto names. Yes, they're going through a pretty tough patch, but I think we're certainly sticking with our positions. We're sort of just taking the hit as such in the short term. We do believe though that these companies will come out the other side. There's some fantastic companies with excellent products. But clearly, the growth slowdown that we're seeing is being most felt in that auto and two-wheeler space. So, we will come out the other side, and at the end of the day, as investors, one of the few things we can control is the price we're willing to pay for a stock, and clearly there is good value in some of these auto stocks at the moment. But who knows when they're going to bottom out?
Hi, Jonathan. You were mentioning about the premium valuations that India trades as, compared to the other emerging market peers. And of course, we are still at premium valuations, though Nifty could have come off from 19 times to 17 times now. Do you see more downside from current levels for somebody to deploy fresh money into the markets? And I'm talking from FPI standpoint right now, because there were some reports indicating how China is now opening up, to the FI community, and we could see shift of money flowing from the Indian markets to Chinese markets.
Yeah, so I guess and it's an argument I've used many times with investors. Why first of all, we've got to understand why India trades at this premium valuation. Have we seen other markets trading at those sort of premium valuations in the past? And certainly there has been periods where other markets have traded at these very high premium sort of valuation versus EM peers. I guess India has consistently done it for a very long time. I would say that the reasons for that are still there, with India and the quality of companies that you can find. So the reasons are still there, but it's one that certainly when I speak to potential investors into India, it's one of the biggest hurdles that we certainly have to face is explaining this valuation premium that investors have to pay to get into India versus other emerging markets. So it is an issue, it is something that we have to do. I do believe, however, that India, in certain segments does deserve to trade at a premium to other emerging markets. And really, from a personal view, it's mainly down to the quality of this type of corporates that we can access, that we would struggle to access in other emerging markets of a similar quality corporate. So I think the premium valuation is justified, but it's certainly one which puts a lot of investors off. There's no doubt about that. And I think when you also consider that a lot of big foreign investors are probably quite underweight emerging markets generally, it's still a relatively small part of a portfolio. India is an even smaller part, within that as well. So, yeah, it's. I think at the moment the China side probably and the whole trade issue still dominates sentiment, and that's probably going to be the biggest factor to look for. And then if you do get a resolution, you will probably see the Chinese indices doing quite well in the short term. But the last point I'd make on this one is India has underperformed global markets now, or developed markets, if you like, for the last 2 months. So some of this is being corrected anyway, this overvaluation.